Welcome everybody. Today we're going to be covering AccountsPrep, so our new kind of smashing tool for self-assessment, and we're going to cover some MTD stuff as well. Just a quick introduction to myself then. So I'm Sean Smith, sort of accountant and bookkeeping evangelist here at AutoEntry. A sort of brief history of me. So I'm an accountant by trade, but moved over to the software side of things about 8 years ago. And then my role in various software companies has always been quite consultative. So spent a lot of time on the road working with different bookkeeping and accounting firms, helping them roll out new software or change projects or new service lines, that kind of idea. So that's a little bit about me. But in terms of today's agenda, so you'll see from the slides here, we're going to be looking at self-assessment, some sort of tips and tricks and kind of things to help in the approach to that. A little overview of MTD in terms of the rules and regulations and what's kind of coming our way. And then we'll look at our pre-accounting tool. So the secret solution is AccountsPrep. So we'll have a little look at that as well. But before we get into it, just put up a little poll here. So for those of you that kind of watch the recording, I'll read out the question. So if you process self-assessment returns, are you still doing any right now? And the three sort of responses are yes, or most are done, and the third one is no, finished already. So I'll just give you guys a couple of minutes to respond to that, and then I'll share the results and see where we're all kind of sitting. Okay, so in terms of respondents there, in fact, you can see it on the screen. So 59% saying yes, 23% mostly done, so well done there, and finished already 18%, which is wild. That's really good work, well done there. Absolutely. So obviously there's still a large chunk of us looking to get that work kind of done. So let's have a little look at point 1 on the agenda then. So our self-assessment, so our tips and tricks, sorry. So I thought I'd start here with just a poll that we did on Accounting Web, and the results from that to kind of give you an idea of what we're looking at here. So from the graph you can see, so what percentage of returns are completed in January. So you can see there's a real kind of spread here, but almost kind of mirrors a little bit of what we saw in the poll result that we just did ourselves there. So a large chunk of the work still being done in January, which is obviously not ideal, and that's why technology is hopefully going to be something that can help us kind of bring that deadline forward. And then on the left hand side, we've got the question, what would you do differently next year? And there's a few different answers, but you can see, I think the standout leader here is just chasing clients earlier for that information, which of course makes sense. The sooner you get that information and the sooner you can get the work done, but that's the age-old problem, right, of how do we get clients to engage with that. So hopefully we can talk about some tips to kind of battle or kind of deal with these problems. So just some tips that we kind of picked up along the way. This is not an exclusive list, of course, but we'll just go through a few of these. And of course, remember, you'll be getting a download of all the slides at the end of the webinar. So if there's any kind of note taking or anything you want to come back to, you'll get the slides at the end so you can kind of review this. But so the first one is just, setting your own deadline. So of course, HMRC's deadline is 31st of January, right? But that doesn't mean that we have to work to that deadline. So having your own deadline for your clients, bringing that maybe a month earlier, for example, or even sooner than that, and saying, look, this is our deadline, this is what we work to, so we expect the records in, so on and so forth, meaning that if they overrun from your deadline that you've given them, you then still have time to reach the HMRC deadline, even if they're late in with their records. Another thing to do would be to incentivize clients. You can almost kind of marry these two together. So I've seen this done quite well, sort of incentivizing or de-incentivizing clients. So sort of saying, if you get your records into us by X date, we can guarantee that your self-assessment will be done on time, because you got the records nice and early. And you could also, marry that with an incentive that's financial as well. So sort of saying, if you get the records in by X date, it's actually 10% less or 15% less or whatever it is. But conversely, you can do it the other way, right? So you could sort of de-incentivize them to be late. So you could sort of say, if the records come after this date, we can't guarantee that the work will be done on time, and also it will be X percentage more expensive because we're having to work late and work weekends to kind of get those deadlines met for you. So you can kind of approach that incentive piece from two sides of the coin there. Try and make it simple, so using online portals, allowing them to upload documents and things like that sort of quickly and easily. And this kind of marries with the second point here about being where they are. So providing them with portals is great, providing them with apps like AutoEntry, for example, allowing them to kind of snap pictures on the go. There's even integrations now with messaging tools like WhatsApp. And that kind of ties into that, meeting them where they are, right? So if emails aren't working, but they're very active on Facebook Messenger or WhatsApp, try and get them to send the records in that way. Or if they're great at WhatsApp but bad on WhatsApp, but they don't use that, and they're great on emails, meet them there. Wherever's kind of like the easiest medium, you want to remove as many barriers as you can, for getting clients to kind of send records into you. And a lot of it's around habit forming as well, right? So if they're on Facebook and WhatsApp all the time, then it'll probably feel like a really easy change for them, to kind of just snap a picture and send it over to you. Whereas if they're hardly ever in their emails and you're saying, oh, we only accept information by email, maybe that's a difficult habit for them to set up. So just trying to meet them where they are and keep it as simple as possible for them getting their records over to you. Thinking almost like after the event. So those are some tips for beforehand or to think about. But as we kind of come to the end of self-assessment season this year round, kind of identifying and taking action on what went well and what didn't go well. So try and do it early, February time, when it's still kind of fresh in your mind. Think about who are the repeat offenders and what are we going to do about them. Is it a case of giving them an easier option or chasing them earlier, or is it a case of putting the price up, or is it a case of getting rid of them? What are the kind of options, and just having a think about what that might look like, segmenting that client base down and trying to understand the problem areas and how to kind of improve them. On the other side of that, if January isn't super difficult for you, that 18% that have said that they've already kind of finished their returns, could January become an opportunity for you? We know that the cost of acquisition of new clients can be quite expensive, rather than sort of selling more to existing client bases. So if you've got clients coming through the door, whether that's virtually or physically in the kind of January period, because they're unable to get this work done by their existing accountant or bookkeeper, then possibly if you've got really slick processes here, this is an opportunity for you to kind of gain new business and take advantage of the fact that you're ahead of the game and your processes are really slick. And AccountsPrep could actually help with this as well. We'll show you a video later on of it in action, and hopefully that'll give you an idea of how sort of smoothly and quickly it allows you to kind of process these kind of year-end jobs really efficiently. So if we go into point 2 of our agenda today, is looking at MTD, and we've got another poll that I'll pop up on the screen now, just before we fire into this point. So what do you know about MTD, making tax digital for income tax? So we've got 3 options here. So number 1, I know a lot about it. Number 2, I know a little about it. and number 3, MTD for what now? So that's just see where we all are in terms of our making tax digital knowledge, and then we'll fire into some insights that we have from our end. Okay, so good that 0% on the third option, so everybody knows what MTD is, which is what we would kind of expect. You know, a good chunk, 25% know a lot about it, so that's great, and then sort of 75% know a little about it. And I think the goalposts have been moved quite a lot, and so that kind of makes sense, I think, in terms of understanding what's coming. So let's go through the sort of high level things that we know so far. So in terms of who's going to be not infected but affected, so we know it's going to pull in landlords, we know it's going to pull in sole traders. I'm just going to move my speaker notes down here. So in terms of what that kind of looks like, in terms of the numbers, it's a lot bigger than the VAT MTD kind of process that we went through. And if you remember that, certainly I remember a lot of the firms that I was working with found that a struggle. The main problem was kind of leaving it a bit too late. So there's about 2.5 million affected businesses for MTD for VAT, and we're looking at close to 4 million businesses affected here in the first round of EDSA. Obviously, as the years move on, which we'll kind of look at in a second, the thresholds are going to come down, so it'll affect even more businesses. So I think the key kind of thing to understand here is just the volume of clients that are going to be affected, and learning from MTD for VAT, knowing we've got an even larger volume to come that we need to sort of prepare as early as possible. We kind of split down the different kind of people that were going to be affected here as well. So just reading from the slide, we're going to have sort of second income landlords and non-landlords, so people that kind of had property but they're not really consider themselves a landlord, but they may still actually be sort of captured by that threshold. And we got the kind of split of the self-assessment kind of areas. So you got those blue collar kind of trades kind of people. You also have like any kind of professionals, maybe like IT consultants, things like that, that are self-employed as well. They'll all sort of be captured by this MTD for income tax. And in terms of the timeline, so just looking, as I kind of alluded to there, the threshold coming down over time. So we know it's coming in April 26 from the budget, and that's going to pull in sort of anyone with a combined income of over 50,000. Then that is going to drop down to 30,000 in 2027. Pardon me. And they've said it will drop down to 20,000 as late, or at latest 2029. But the general feeling, certainly what from the conversations I've been having, is that will come earlier than that, probably 2028. They're just being kind, I think, by saying latest 2029, giving themselves a bit of a buffer there. And then some other information. So they've not included when partnerships is going to be pulled in yet, so that's still to be confirmed. Income tax for all levels still to be confirmed, and income tax for corporation tax still to be confirmed. So no sort of definite date coming out from HMRC on those as yet. So the tax requirements then around income tax. So making tax digital for income tax. So you're going to have to sign up is going to be the first thing. So making sure you've got your agent services account. Obviously, the requirement of making tax digital is that you must maintain your digital records. That's not news to us. It'll be periodic updates. So if you imagine, instead of it all being at the year end, it's going to be quarterly updates. So you could have an individual with self-employment and a property, for example. Those kind of updates will need to be given quarterly, and there'll be a sort of final declaration. So you can make adjustments and things like that as well. So you'd have to do four submissions instead of the one. But if there's any kind of mistakes or new information comes to light throughout the year, you can make those adjustments as you go. I think the ruling is just as long as those adjustments are made before the final declaration, then that's absolutely fine. Of course, this will all have to be done through third-party software as the submission medium. And hopefully, if all the kind of updates and information is submitted throughout the year, the final declaration really just becomes a confirmation, like a click of a button that kind of crystallizes your kind of tax liability point. At that moment, you're sort of verifying with HMRC that all the information that's come previously is, to the best of your knowledge, correct. And that final submission declaration date is the same date as it's always been for self-assessment. So that's kind of the approach that we're looking at for MTD. And the big shift there is obviously it's moving from a 1 year exercise to 4 times a year exercise, which is why it's going to change the way we approach our clients in terms of how we communicate with them and the way we approach the work as well. So that's going to be the biggest shift, is the once a year to 4 times a year, and how that kind of affects your internal processes and how you're going to kind of deal with that. So what can we kind of learn from MTD for VAT? So there's a few things we can learn, but I think that the main ones for me are going to be the 2 green pillars at each end of this. So start as early as possible in segmenting your client base, preparing for what that kind of shift in work is going to be like. And in doing so, carving out that time now to start preparing and start sort of communicating regularly and things like that. So those are the 2 important ones, I think, but certainly communicating regularly and often about the changes, getting your clients aware of what's coming so that it's not a shock to them. Maybe try and embed some habits early on. Self-experience is great, so using the tools that you're going to give to your clients, learning about the dates and deadlines and what's going to be needed and required from you. Working with open-minded clients first, so that's why the segmentation exercise, sort of breaking down your clients, is quite useful, because you can put them down by like job role or job type, like what genre or industry they work in, but you could also split them down by like mindset. So then you've got sort of open-minded digital kind of clients that will engage with you, or you have a good sort of personal relationship with. You can maybe work with them earlier to kind of iron out any kind of kinks in the process, whether that's your processes or the technology that you're using. And of course, seek out support, right? So speak to your providers of software. They will have plenty of information and individuals that can help you. And then also like your own communities, right? So whether that's Facebook groups or whatever it is, forums, things like that, you'll have hopefully a great community of like-minded individuals that you can kind of reach out to and kind of see if they've got insight, or that they can kind of give you advice on what they did last time or what worked for them and those kind of things. Some little kind of MTD gotchas, so kind of things that maybe could catch you out that we're hopefully, by telling you now, it won't, is that clients already have to be kind of signed up at least a year of self-assessment to sign up for MTD. So you can't just jump straight on board. So making sure that you're picking out those clients early, that's why that segmentation is useful, so you can get them kind of signed up as soon as possible. So what's a digital record? So I'll just read from the slide here. So HMRC needs the amount, the date, and the tax category. And that's kind of all they kind of need. Another thing is, a digital record. So if you don't have the invoice, for example, but you have the bank statement, that's still a digital record of the transaction. So it might be that you don't always need the invoice, for example. If you have bank feed and that bank statement coming in digitally, that's still the record being captured in the HMRC's eyes. So they don't need don't always need the transactional data, so it can go both sides. Just the tax category totals, which is really useful. There are easements, So there'll be sort of different sort of softening of the rules for jointly owned properties, 3-line accounts, and retail sales. And then the big one here is clients with multiple agents. So similar with VAT, you can't have multiple agents at the moment, but we have been told that HMRC are looking to fix this ahead of April 2026. So just to be aware of that as well. And then moving on to our final kind of agenda point for today then is our pre-accounting sort of secret solution. So accounts prep by AutoEntry. And then similar to the first 2 points of the agenda, I've got a poll for you here. So how many of your clients do not use sort of accounting software, cloud accounting software of any type? And so we've got option 1, sort of 0 to 30%. Option 2, we're looking at 31 to sort of 60% of your client base. And then option 3 is 61% or more of your client base are on an accounting software tool. And we'll just give you a little minute to answer there. There you go. So there's the results there. So we've got, yeah, so 21%, 30 to 60 and 60 plus, but 51% are 0 to 30%. So there's still a good chunk of clients out there, as expected, that aren't on accounting software. And so that presents an issue in itself, right, with MTD. For it, so they're going to have to be on a software, so there's going to be this migration process that we're going through, which is why we've released or re-released, for those of you that have been aware of AutoEntry or been AutoEntry members for a while. We did have AccountsPrep before, and we've kind of revamped it and brought it back. And we think this will be a really useful tool in helping you kind of bridge that gap and that workflow kind of spike that's going to come your way. And so without trying to teach you to suck eggs, I'll just quickly go through sort of how AutoEntry kind of works. So you've got your ability to capture documents. So you have your invoices, your receipts, all that kind of idea coming in, whether that's a shoebox or a Tesco bag or whatever kind of way it's being brought in. So that stuff exists. But what AutoEntry allows you to do is kind of capture that information. So if it's coming in email form, you can forward it by email. If it's a paper receipt, you can scan it in. If it's a paper receipt, again, you can also take a picture with your phone. Or if you've scanned it in and it's now on your laptop or your computer, you can kind of drag and drop that into the browser window and it'll upload into AutoEntry. Now what AutoEntry will do, it's got a lot of AI and machine learning built into it over the last decade, and it's got all that kind of learnings built into it. And what it will do is read those documents, pull out the important information for you, and then allow you to push that information with the receipt attached into your bookkeeping or cloud accounting solution of choice. Now that's an agnostic approach, so we know that the majority of firms don't just pick one. They'll have a kind of mix of different softwares, and so any of the providers here you're able to plug into. So you got your main kind of players in the market: FreeAgent, QuickBooks, Xero, and Sage, of course, and you're able to push that in. And if it's not one of the kind of major players, you're able to get a sort of Excel extract there that's then importable into whatever solution you're using, whether that's TASBooks, cash flows. There's a lot out there. So that's kind of how it works. And then, so how does it kind of look, self-assessment look for clients that are using accounting software? So for the sort of 21% that have a large part of their client base on software, what does that kind of look like? So your client will provide you with receipts similar to what we've got on the image here. You kind of capture them using AutoEntry. It will capture that information, extract the vital bits of information from those documents, and then there's an integration directly into your accounting software where you can reconcile, make any kind of adjustments that you need to, and then within that software, click to kind of create your self-assessment tax return. So that's how it kind of looks for clients that are on accounting software. But if they're not on accounting software, this is where AccountsPrep can come in and be really useful. So your clients still give you the information as they always have, and you're able to capture it through AutoEntry. But instead of integrating it through, integrating it through your accounting software, you can summarize within AccountsPrep, and what that will allow you to do is kind of go through the bank statement, for example, really quickly, categorizing and coding up in bulk, so you can do large segments, and then that will give you the sort of output or report that you need, that you can then file through a compatible third-party software. So you can just do a quick import and then submit that through. So in terms of how that kind of looks from a workflow point of view, it looks exactly the same as the previous slide did, except it's AccountsPrep at the end instead of your Zeros or your QuickBooks or your Sages of the world, so the sort of bookkeeping solutions there. So kind of quickly looking through how that kind of looks, similar to the slides that I've just gone through. So you've got the bank statements, and you can upload those, whether that's bank feed or paper statements, because AutoEntry is brilliant at reading those CSVs, PDF statements as well, certainly from the banking side of things. So AutoEntry will go through and grab those for you, and then you integrate AccountsPrep with your client's accounting, so you can do all your adjustments within that and file your final accounts from there. So this is AccountsPrep. There's a kind of screen grab of the product, but it's probably easiest to kind of show you it with the video that I've got next. So I'll just move over to this, and hopefully this plays and you get the sound through as well. So I'll just pop this on now.
Before importing bank statement data, take a moment to review the chart of accounts selected during the initial setup. This is where you can tailor the accounts to your needs by adding, editing, or deleting accounts as necessary. You can also import additional accounts if needed and set up default tax codes. So when you apply a nominal code to a transaction, the system automatically assigns the appropriate tax code for you. Next, head to Settings, where you can choose the default accounts used by AccountsPrep for automatic system postings. Additionally, you can manage and add tax codes, as well as set up additional analysis tags for transactions. Lastly, review the bank accounts sections to check all bank accounts. Add, delete, or rename them to suit the company's needs. For opening balances, we provide templates you can download, fill in, and import back into AccountsPrep for accurate reporting and compliance. Go to the Banks tab and select Bank Statements. Pick the relevant bank account, then click Add Bank Statement Data. You can import data in 3 ways. Use AutoEntry Statement Capture to import previously extracted bank statements stored in AutoEntry. Import data using a CSV file, or enter the data manually on screen. In this example, we'll use AutoEntry Statement Capture. Choose the statement you'd like to extract from the drop-down list, choose the date range required, and the data will be ready for processing. Once your data is imported, the transactions will appear in the Unposted tab. AccountsPrep automatically flags potential duplicates, allowing you to review and delete them with ease. You can sort the transactions by clicking on column headers, tailoring the view to your needs. To categorize transactions, use the checkboxes to select relevant entries. Double-click on the account column and choose the appropriate account from a drop-down menu. Apply tax rates if needed to ensure compliance. With AccountsPrep, you can search for specific transactions, enabling bulk processing and saving time on large statements. If you are unsure what account to assign a transaction to, simply flag it for other colleagues to pick up. AccountsPrep simplifies the process of managing complex transactions. Easily document transfers between bank accounts. For example, if you're recording a credit card payment, just click the transfer button and select the relevant account. AccountsPrep will automatically search for a matching transaction. If no match is found, you can still proceed with the transfer, ensuring everything is properly tracked, even without a match. For transactions that need to be divided across multiple accounts or tax codes, simply split them for precise reporting. For clients who still rely on checks, AccountsPrep has you covered. Add or import them within the checks section. Then use the checks button to start matching them with transactions, simplifying check management and tracking. AccountsPrep automatically finds the match if there's one. Once you're satisfied with the data, click Post to move the transactions from the Unposted tab to the Posted tab. For clients with cash sales or expenses not reflected in bank statements, you can import them through the Cash Sales and Cash Expenses features. This is especially helpful for tax-registered clients needing to report tax accurately. You can also make journal adjustments, especially useful for off-statement data in 3 different ways. Quick journal entry. For fast, simple adjustments, standard journal entry. For more detailed entries and double journal entry. For balancing complex debits and credits. Now that the data is processed, you can generate and export reports. Under Reports, you'll find a variety of exportable reports. Let's start with the Account Details report, which gives a detailed breakdown of activity for each nominal account. You can filter by account, search for specific transactions, and even edit them as needed. It also enables you to review flagged transactions and make any necessary adjustments. Exporting this report to Excel is simple. Just click the arrow to download it. Next, check out the Profit and Loss report, which displays figures for the selected reporting periods. You can compare up to 3 periods, depending on the data available in AccountsPrep. To export this report to Excel, click here. When you're ready to export data for your account's production, go to the Export Data option from the Reports list. Choose the format that matches your account's production software. If your software isn't listed, use the generic format for easy compatibility. Once you're satisfied with your settings, export the data, and it will automatically download to your computer's Downloads folder.
Awesome. So hopefully,
Before importing,
there we go. So hopefully, yeah, that gives you an idea of what AccountsPrep is like in action. And really, it kind of, I think it fits really well into that sweet spot of, you know, arguably those income expenditure clients that we're maybe not doing sales purchase control for, that you could say are they're not big enough or complex enough to warrant you know, accounting software or a bookkeeping software. How do we kind of solve for them? And I think AccountsPrep really fits into that bracket brilliantly. It's an add-on to AutoEntry. So from this screen here, you can try AutoEntry for free, by the way. We've got 50% off for the first 3 months as a deal at the moment, but it's simply just going to the website, clicking that you want to try it. I'm pretty sure it just says try now. No credit card required, and you'll get 25 free credits to kind of try and use AutoEntry. Maybe use it in parallel to your existing kind of process, whether that is a system or manually, and see kind of how it works, see if you're going to get any kind of efficiencies out of that. But as an add-on to that is AccountsPrep, and the reason I think it's a real game changer in this market is just the sort of price point that it's coming in at. So it's an add-on to AutoEntry, so you would have to have an AutoEntry license, but then you can add AccountsPrep to it, and it's £50 per month for that add-on, and that will allow you to use it for unlimited clients. So just a really great sort of price point for working on those clients that are, you know, not on software or too small for software right now. The MTD is going to capture them, and they're going to have to be sort of processed digitally and submitted digitally moving forward. So yeah, that kind of brings us to the end of what I wanted to cover today. We do have a bit of time left, so that can be used for any kind of questions that you have right now for me. we can answer them now, or we can come back to you later. Or if there's no questions at all, then just thank you very much for your time today, and you can have some time back and get back into your whatever you were up to today before I interrupted you.
Hello,
thank you very much for your time.
Just looking through the questions. By the way, my name's Kira. If anybody is listening, I'm the sort of organizer. Got a question here from Claire Kendall. She says, I have seen multiple agent solutions in beta. It's good. They said they were aiming for April 2025 to deploy it, apparently.
Oh, amazing. Brilliant.
Yeah. So I was at AccountsPrep, and the guy may well have said that I may have got mixed up there, to be honest. Okay. Here's a question from our friend who we know very well, Susanna Whelan. Hello, Susanna. Hope you're well. She says, how do you recommend dealing with clients who have a regular number of cash transactions when it comes to MTD? Is a spreadsheet sufficient to import into accounting software? Obviously, all cash expenses have receipts to accompany them. Cash takings are currently recorded on the spreadsheet, as sales invoices are not required by customers. The client's not VAT registered. Could a separate cash taking spreadsheet be integrated with AccountsPrep along with the bank transactions? I think that's what I may well have to go off and get an answer for that one, I think, from some of our specialists.
So I think the answer is yes. It wouldn't necessarily be a spreadsheet, but if you remember from the video, there was the option to add bank accounts. You can add a cash account in that section as well, and just manually enter any cash transactions that you have. So if you are maintaining that somewhere else and you need to sort of keep it digitally for your MTD requirements, then I think that would be the way to solve it. Certainly that's how I would approach it, but we can come back if we find a better answer or a different answer to that. But that's certainly how I would approach it.
Yes, Susanna, just drop me a line. I think you've got my email address, haven't you? So yeah, I'm happy to try and get answers to any of these questions, by the way. Yeah, I think you all have my address because the invites come from it. So you can just drop me a line if you have any other questions, or you get any of these questions are a little bit too complicated. Another question from Claire here. Do you have to use the bank statements for AccountsPrep, or can you build accounts for invoices and receipts? If you need bank statements, can you have multiple bank accounts for one client?
So say that question again.
Sure. It says, do you have to use the bank statements for AccountsPrep, or can you build accounts from invoices and receipts? If you need bank statements, can you have multiple bank accounts for one client?
Yes. So I'm not sure on the first bit whether you need bank statements.
No, you don't.
To build it
Yeah, you can use any data source you want. To be honest with you, bank statements is probably the most convenient, but you could easily build it from receipts and invoices. Yeah, you've got a sufficient amount of them. Yeah.
And if they've got multiple bank accounts, yes, it's capable of handling that as well. Yeah, that's absolutely fine.
Cool. Question here from Lisa Leonard. Is the threshold for MTD based on income, turnover, or profit?
It's based on income, isn't it? So it's the accumulated income from the multiple sources. So the new ones that are being captured is obviously the landlord stuff and self-assessment, but I think it's the accumulated income in total.
Yeah, I think it is. Yeah,
rather than opposed to like profit, for example, it's definitely the turnover income side of things.
Yeah, and it's added together. So you've got landlord income and you've got your sole trader income. They both get added together for the purposes of working out for the MTD purposes. Okay, question here from Amy Baker Murray. She says, how quickly does a bank statement get generated into an AccountsPrep bank statement?
To be honest, I don't know exactly, but I think it's probably in the sort of seconds and minutes kind of realm rather than the sort of hours or days kind of realm. We do track that stuff regularly. I think I'm clutching at straws here because I've not been to an update recently, but I certainly think about 6 months ago I was at an update meeting where they told us the average transaction time was about 15 minutes, something like that. Of course, that takes into account any kind of failed things which have like huge times on them. So I think the average says about 15, but it's typically less than that unless something goes wrong.
Okay, and then one question here from Stephanie Busby. Sorry to ask if already asked, but will there be a recording as a client decided to call at the most inconvenient moment? Yes, there will. Everybody gets an email at the end of this, even if you didn't attend, obviously. If you didn't attend, you won't be hearing me now, but everybody gets an email with a copy of the recording attached to it at the bottom. And I think that's it, Sean, for questions at the moment. Anybody else got any before? Just pop them into the questions box or the chat box, and I'll read them out.
Maybe just call out that the handouts are in the panel now, which is a copy of the slides. So there's a handouts tab, but you can just download that PDF before we close the webinar down.
Yeah, and we added a few extra slides into that one too, which have a bit more detail, a bit more explanation about the timescales for that first year of MTD as well, which could be very handy. I think that's it, Sean. No more questions.
Awesome. Right. Well, thank you very much, everybody, for your time, and have a lovely rest of your day.